I'm a big fan of investing in the stock market. I've talked about the stock market at a lot of our workshops in the past and just feel that the benefits outweigh anything else. We live in a very low interest rate environment right now. The credit union is going to do the best job they can for you, getting you the best interest rate possible on deposit accounts. But the fact of the matter is we live in a very, very low interest rate world right now. And in many ways, after taxes and inflation, you're really not making a lot of progress. You're not making much progress at all. And the main reason you invest, people ask me all the time, why should I invest in the stock market? Why should I invest in mutual funds and stuff like that? It's really simple. The whole object of investing is to have your money grow at a rate faster than the rate of inflation. Okay? You have to have the buying power of your dollars impacted positively by the investments you make. Because inflation is the biggest enemy that you'll all face when you ultimately get to retirement. You're going to be and many people put money into fixed rate accounts, and in many cases that just doesn't provide the income they need. So their buying power of the dollars they have goes down year after year after year. In other words, you go broke slowly. Okay? And that's just not what you want to have happen. And we're all living a lot longer because of the wonderfulness of modern medicine and the things that are developed by great pharmaceutical companies right here in our own backyard. We're living longer, and you need to make sure your money is there growing for you. That's why I have a tendency to lean towards stocks. And there are a lot of different ways you can do it. Take a look at the different accounts that your employers offer you in your 401k or other plans, and find the ones that work well for you. There's a lot of different accounts out there that they have, stock mutual funds, bond mutual funds. A lot of one of the hot things right now are these target date funds, where it has a maturity date associated with it, so you could plan out accordingly. I'm not a big fan of those per se, but they're certainly worth taking a look at, and you can look at the opportunities they provide. The thing I love to talk about, and we've got a lot of new people here, so you probably haven't heard me talk about these things in the past, is I'm a big fan of dividend-paying stocks and mutual funds that invest in dividend companies. And I think that in the world that we live in today, that's probably as low-risk investment as you can make toward the stock market. Dividends are great. They are a way of sharing the earnings of a company with the shareholders. It's part of the benefit of being an investor. But not all dividends are created equal, and you have to be very careful about what you do when you're looking at dividend-paying stocks or mutual funds in your accounts, your 401k and retirement accounts. There are a lot of mutual funds that are dividend-oriented. I like a particular group of stocks that are called the dividend aristocrats. Let me tell you about these guys, because they really are, to me, one of the simplest and easiest ways to invest in stocks that pay dividends, but more importantly than that, increase dividends. Now, again, I'm not a financial advisor. I'm not a broker. I'm not here trying to sell you any products, so relax and don't worry about that. I always say in full disclosure, I need to tell you that I was a stockbroker for 15 years. I'm in a recovery program now, and I take it one day at a time, and it's going pretty well. So I'm not here to sell you anything. So I'm just giving you ideas and recommendations. You all follow up, and if it's right that it's something you're comfortable with, then go ahead and do it. But don't do it just because I set it up here, okay? But I want to talk about these aristocrats. To be a dividend aristocrat, you have to have done two things. You have to have paid a dividend for at least 25 years in a row. Number two, you have to have increased that dividend every year for at least 25 years in a row, okay?